Hello, good afternoon. You're tuned into ET now and the last part of the trading session, and it looks like we are going to close in the green, at least if this is the trend to go by. Yes, we're off the highest point of the trading session, but nonetheless 22,650 has been held comfortably, and we're inching higher in the last few minutes, so not too much to worry about. The Bank Nifty 2 is yet off the highest point of the trading session by almost 150 points, but there's a bit of a stability right now in the market, so we're watching out for how that progresses. The mid-cap and the small-cap index both are doing quite okay for themselves. In fact, the mid-cap index is now materially off the lows of the day, because at one point of time it moved into the red, but now back in the green comfortably, and the small-cap index too continues its good run. Sectorally speaking, it's autos which is leading from the front, and what's really doing quite well for itself is Exide Industries. That stock is up a solid 16% after that tie-up with Honda as well as Kia. And then the other companies like Amara Raja, etc. are also buzzing on account of Eicher Motors, that's high by 4.5%. Maruti, TVS Motors, these are some of the other names which are doing well. Q4 updates have come in, and a few stocks reacting to that. So Voltas and InfoEdge, even real estate names like Godrej Properties, Prestige Estate, all of these stocks are in focus on that. So a lot of buzzers in the trading session, Aisha, and then of course the news flow and the reaction coming into a couple of CEO announcements as well.
Oh yeah, absolutely. Can't take your eyes off from where Wipro is settling in at. Let's bring up that interesting graph for you. And of course, Bandhan Bank, the kind of crash that stock saw. Wipro, even though it started off in the green, less than odd 1%, it's now drifted in the red. In fact, that's where it spent a better part of today's trading session. Similar is the case with Bandhan Bank. No resurrection really coming in there, and brokerages have not really liked the move from Chandrasekhar Ghosh. Jefferies has downgraded the stock, cut the target price as well to now 170 from the earlier 200. In the meantime, look at what's happening really on Nestle as well. Remember, the parent hiked royalty fee to 5.25% from the earlier 4.5%. That stock has been more sedate in trade. But the big movers today, like Anisha was flagging off, it's a double-digit run there, and then Naukri, after InfoEdge's billings have been ahead of estimates, and Naukri clearly bouncing back. That's one stock which is holding out very, very smartly in trade. Voltas as well. The AC sales so far have been by far the highest. 8% of a surge coming in there. Godrej Properties, Eicher Motors. It's an interesting list of winners out there in the market as well in steady shape.
So, Asha, you would have ideally liked that Bank Nifty should have taken a greater, force or greater leadership. That's not happening. You may have liked ideally that there should have been a little bit follow-up buying in some of the Birla group of stocks after last week's breakthrough, or after last week's real solid price action in Aditya Birla Capital, Ultratech, and for the matter ABFRL. That is not happening. But what is important are three factors. Factor number one, if I fundamentally analyze the market, it's purely based on the merit of Q4 numbers. I'm struggling to find if there is one company which has come out and has disappointed. All companies are talking about demand growth, visibility, margin expansion, and updates are centered around demand, so to speak, even from FMCG companies, which in a sense have suffered. Naukri.com, a clear benchmark of which way job creation is happening. HDFC Bank, a clear creation of which way demand is moving. Marico, a clear indication of which way rural demand is moving. Titan, a clear indication of discretionary demand. You connect all these four together, along with auto dispatch numbers which came for the month of April 4-5 days ago. The market is getting a fundamental push. That's point number one. Point number two, you are again outperforming. Is it largely because of what is happening in terms of the market, because election is around the corner? Because if that was not the case, then at a time when institutional flows are so low, why are markets going up? Which means there is an evidence of pre-election buying which is happening. And third, look at the reaction to news, whether it is on Bandhan Bank, or whether it is coming on Voltas, or whether it is coming on, let's say, Wipro. Markets are reacting to news. So Bandhan Bank news is bad, stock is getting punished. Voltas news is bad, the stock is getting rewarded. So there is definitely an element of fundamental push in the market. I don't think anybody was expecting such strong Q4 updates. Yeah. And that, to my mind, is a surprise.
Yeah, talk about overreaction. Look at an Exide stock, 16%, and I mean, we have been speaking with Shrishti as well. Nothing to warrant a 16% move on the stock, right? I mean, yes, they signed an MOU, but right now you don't even know the revenue potential of it. So yes, it's something which has opened the door perhaps for more partnerships. And get Shrishti online to talk to us more about that, but let's take a chart check going. Do you agree with the view that the move seems to be a bit overdone and the stock will retrace, or do you think it's a bit of a breakout that will continue the surge?
Well, intraday wise, yes, the move seems to be overdone. But then, after these kind of moves, stocks they generally, start off or channel up a fresh, uptrend for themselves. So look at this way. Exide over the last 2-3 months from 350 as a 350 or 355, the stock had fallen down to almost 290 to 95 levels, and now the stock has come back again towards a breakout about 350 plus mark, which means potentially, the stock has retraced a 60-65 point correction for itself. So, which means on the upside, the stock should rise up by at least 35 to 40 points on the upside before it finds a major resistance on the medium term. So, short term, purely on the intraday charts, the indicators are definitely overbought. But I would believe that after such kind of a strong price action move, price volume move, the stock generally starts off a fresh uptrend, which means I would expect 385 to 400 levels for the stock over the near term.
Okay, let's try to understand this news and its implications a bit better, considering the stock has been soaring high in trade. It comes on the back of an agreement which Exide signed between Hyundai and Kia for EV batteries in the country. Let me take it across to Shrishti and get in more details on the same.
Well, yes, big news coming in from Exide, wherein the company has announced that they have signed an MOU with two of the major OEMs, that is Hyundai Motors as well as Kia, where their focus will be on the localization of EV batteries in India for both these OEMs. Exide will play its role. What Exide has said that the strategic collaboration marks the beginning of Hyundai Motor and Kia's expansion in India's battery development and production market, and more specifically, they will be focusing on lithium iron phosphate, that is the LFP cells for these OEMs. So Exide is going to play its role in the EV batteries, going to help these OEMs for localization in India, and that's indeed big because as we know that Exide as well as Amara Raja, they have been investing into the EV battery manufacturing space. Over the years, we have seen a lot of announcements during that, but it's still some time then we will see these batteries coming into play, because for Exide specifically, have said that initially their EV capacity will be of 6 gigawatt hours, and going ahead they have planned to double it down to 12 gigawatt hours in the times ahead. They have also come out with their capex plan, but all these EV battery production will actually start from Q4 of FY25. They have already ended at FY25, so maybe by this year's Q4 we will see these batteries getting manufactured. Exide does estimate that the lithium battery demand is expected to increase from 40 to 50 gigawatt hours by 2025 and 150 to 160 gigawatt hours by 2023. And company has also said in the past that they have already coming out and they're already in discussion with the OEMs for these battery manufacturings. And actually, this is the first announcement that we are seeing from Exide. So this announcement is actually opens the door for more such announcements in the time ahead, is what the analysts believe, and hence the excitement not just in Exide. We are seeing stock up of Amara Raja up anywhere between 7 and 8% as well. Back to you.
All right, now, logically, it's the value migration story which everybody is betting on, and one simple fact which is coming out is that the incumbents are the ones who would be the biggest beneficiary. When it comes to battery, Exide was an acid-led battery, and now hopefully they will move into what could be called as battery technology, which could be powered by lithium and perhaps other products. Sanjeev Bhasin joins. Sanjeev, today's reaction in Exide, 60% higher. We don't know when the revenue line will start. We don't know how they are likely to spend. It is like saying that, I mean, markets are actually factoring in next 3 or 4 years of growth, right?
Yeah, good afternoon, Nikhil. You're correct. And but market had a wave of this. And if you saw since the last 1.5 years, aside from that 130, 140 level, I mean, maybe more than a 1 year back, it has spiraled to all-time highs. Market cap of close to 31,000, and they had already indicated that they are in the process of expanding their lithium ion. We know this is a duopoly between them and Amaraja, and it was a matter of time how fast one would bell the cat and get into that mode. This has now clearly outlined their plan, and you can see that EVs are the flavor of the day, month, and year, and hence maybe a large part of the news was already built in the price. But I think the sheer weight of today's auto move and under ownership may have actually spiraled this big move we've seen of 15-16%. We were bullish on Exide some time back when lead prices had corrected, and we thought that the fall in lead and nickel will be a positive and the margins were delivered positively. But this move has really been a starter. Now a large part of that may be already in, and you may be actually playing on more on rumor. It will take time when all this setup and other things come into play, but they have outlined the roadmap, what the procedure is, and how they are going to play with the OEMs and the establishment for the largest players, that's Kia and Hyundai.
Why do you think right to win lies with Exide and not Amara Raj?
No, Anisha, I would still go with Exide because I think their technology and their disclosures came much before of lithium ion, and I think they are in a very, very sweet spot as far as both goes. So they'll be able to tender to the I side also, and this lithium ion, they have been doing this for some time. It was more than a year back that they had announced that. So we will wait for more color on Amar Raja, but since it's a duopoly, it will be both of them would be beneficial. But I think Exide has been the fastest of the course, so maybe it will have the first user advantage.
Got it. But you're saying that much of the exuberance, Sanjeev, is already in the price at 375, 376 thereabouts. What's the call on the stock?
So, Aisha, we had a buy, like I said, closer to 150. At 20, we thought it was fully priced, but this news will wait for more color. But since markets are looking for new discovery, new ideas, and anything to do with autos and EVs are, being lapped up very, very strongly. So maybe there is a froth because of this news today. We will wait for more color and more clarity. But it's not a buy here. It was, if you have it, then book profit or hold. But I would say wait for more color, wait for earnings. Let the quarterly earning come. Let's see more guidance. Because now you are getting into a trade where I think mid caps are now, already feeling a little bit of pressure because of, the move has been very, very dynamic. But I think here you should be cautious.
Point taken. One needs to be cautious after the kind of move that we have seen. Thanks, Mr. Basin, for making time and speaking with us. So that's the latest coming in as to how the battery makers really stand to gain. There's a bit of a move happening on AstraZeneca. I understand there is some recent announcement that's coming for the company, maybe some sort of tie-up that they have done, and that's the reason the stock shot up. We'll try and get you more details on that. But first, let's step up a very short break.
Reliance is now nearing 3,000. You add Geo back up, it's actually 3,400. 3,400 is a big move in any stock, and today's move also 50 rupees in Reliance by any yardstick. I think it's a very strong move. Beginning of the year to now, I think Reliance has already given double-digit returns. And then you got AstraZeneca and Daiichi Sankyo. The drug has got a board approval, has got a board tumor approval in US. I need to understand this. I don't know what is a board.
Broad
Approval. I don't know what is this. Is it about a drug? Is it about an approval which they get taken from US FDA? I don't think it will have a huge impact on.
So it's for a drug which has got the approval, and the use of the drug is quite interesting. It's to treat tumors anywhere in the body if patients test positive for a protein which is known to speed up the cancer growth. So it's potentially something that can perhaps be one of those magic sort, and I think that is the reason stock is reacting. Of course, this is just, I think, one of the stages of the approval. So let's see how it goes from here on.
But Indian company, this AstraZeneca, the one listed here, and this is a mistake time and again everybody makes, which is that approval for a global entity comes in, that drug will not be sold here. I mean, Novartis may be doing great breakthroughs in the cancer care. Exactly, and that drug has to be approved by US FDA, or even if the drug gets an approval, so you may say that Indian now be the supplier of that drug. Now, for a lot of Indian companies, for a lot of global companies like Glaxo and Novartis, the entire manufacturing arm is not part of the MNC which is listed. It is also always part of a separate subsidiary. That is the case with AstraZeneca, and that I'm sure is the case with Novartis. Even for Glaxo, what we have in India, the Glaxo Pharma business, it only has the distribution business and the domestic business that does not have like the R&D business where they are in a sense really discovering and rediscovering all vaccines. For example, Pfizer, when they had a breakthrough moment in the vaccine, the Indian arm did not benefit. It was the global arm which actually benefited. I mean, COVID vaccine is an exception, but what manufacturing eventually was done in the subsidiary arm. So I think this spike in the stock needs to be ignored. That's my limited point. Anupam Tiwari, equity fund manager with Axis Mutual Fund, joins us now. Anupam, why have we seen so much of volatility in the market in last 1 month? First a drop and then a smart recovery. In terms of news and in terms of the macro, nothing has changed, but we've almost seen a 15-18% swing in small and mid-cap stocks.
Yeah, hi. Just one correction. I am with Grow Mutual Fund. See, what happened last month was basically a reaction to what regulators said, especially in the small-cap space, that they stopped and it was a break. A lot of people had reconsideration. But of course, we have seen good coming in mutual funds. And then people over a period of time realize that valuations are corrected and there are certain opportunities available. And pre-quarterlies started coming in. And that gave kind of confidence to the market. And market recovered almost all of it what we have lost during last month.
We've got you on an extremely bad audio line. We'll try and reconnect. We'll just come back to you in 2 odd minutes or so. XI, Nokia, Voltas, they all continue to hold out. But Kunal, what about banks? Considering it was banks which did the magic last week, led by HDFC Bank, today doesn't seem to be that powered a move, does it?
Yeah, and you will not have a almost a consistent kind of a follow through for these stocks. But then broadly, when we look at this, in the context of how the banking stocks have behaved, HDFC Bank has done remarkably well. So almost like a 170 point up move for HDFC Bank from the Feb lows for the stock. It's nearing the break of its 200-day moving average. That's a very strong technical benchmark for the stock. And I think today for the first time, I think we are also seeing signs that possibly the likes of ICICI Bank, which has been underperforming significantly, that stock could make a strong comeback, potentially breaking past about that previous size of 1120 and then heading towards 1150 mark. So I think the ingredients of the Bank Nifty look very attractive. Maybe it could probably be considered as an off day from the large cap private sector banking names.
Okay, so large private banking names is something that you need to watch out for. Real estate, that as a pack has been doing very well. In fact, last year it had what, a 60-70% return in the calendar year, and this year too has started off very well and doesn't seem like all that echo and clamor of perhaps sales plateauing is at least showing in the numbers for now. Naresh, but what about charts? Which are the charts which are showing signs of fatigue and you would rather book profits out of them into our names?
So something like DLF is showing a lot of say fatigue. Last time the stock topped out at 950, corrected to sub 850 levels. And now when it went to 950, it saw a 3-day correction. So next move, we'll see some pressure coming in. So DLF is something which seems to be showing some indications of a topping out. Same is the case with a lot of these in Prestige, Brigade, where they could see pauses, not really a formation, but DLF could go into a pause, very similar to what happened with the Prestige for multi-months. And at the same time, there are different names which are doing well. So you have a Godrej Properties, which has crossed the 2021 highs, making a classical cup and handle formation. So that is one. Then Mahindra Life, which has hit new fresh highs after 2 years. So one could be switching off names which have done really well in the last 1 year, ended up almost say 500% from 2021 highs, and get into stocks which are hitting 2021 highs, crossing those levels right now.
Just here's an opinion coming in from Sridhar Sivaram, who was with us earlier today, and he's been, of course, talking about is how the power theme is something which is here to stay. He also gives his opinion on banks and says that more than elections, it's not the continuity of the government that the market is worried about, but what the first election after the newly appointed government under Modi 3.0 is going to entail. Hear out an excerpt.
I still love PSU banks because I think that the valuations are very supportive. My personal view that PSU banks will continue to do well. PSU banks in general, my favorite, but private sector banks come very close. If you look at the last 3 years, the profit growth of PSU banks have outpaced the stock performance growth. So they got derated, which people don't realize. Their profit growths have been so strong that the stock prices have kept pace with that. So my view is that the pace of profit growth for PSU banks will come down, but they still have room for performance. Power looks like an interesting space. We've underinvested in power, especially in thermal, you see, over the last 3-4 years, and we could have short. So what will happen is the entire ecosystem will benefit. One will have to investigate which one does well. Sure. But I think if we are going to add so much capacity, it takes me back to 2003 to 7 period when this entire ecosystem did very well. We could see a repeat of that. We could see rational exuberance also in that. We're going to see a boom in this segment.
Okay, so that's the view coming in from Enam Holdings. But for the time being, you have some stocks which are buzzing around. Apart from AstraZeneca, there's a big move right now on JSW Energy as well. The stock has actually hit the mark of 625. Remember, the QIP which just got done was at the price of 485. So from there, the stock has run up almost 30 to 40%. A solid surge on JSW Energy. Biocon is the other one which is actually doing quite well as well. And Page Industries too, after that major dropping that it got earlier, is at least showing some signs of recovery right now. Bandhan Bank continues to feel under pressure, and then Keynes Technology as well is down about in the trading session. But what are the closing trade ideas from our technical experts? Let's go across to Naresh and find that out. Naresh, what's the closing trade idea?
So that would be a buy on Eicher Motors, which has finally broken out of the range, wherein it was getting a lot of resistance around 4100 as 4200, which was the previous high. And this is the only name in the auto which has not broken out and done a big move. So expecting this to go to 4600 to 4800 in the short to medium term.
What about your closing idea?
So I'll go with GAIL as a fresh buy. I think it's an interesting chart now. The stock heading towards the breakout of the 200 mark, and momentum as well as the price indicators are quite bullish for the stock over the near term. So that's a stock which I'd look to trade at.
We're going to take a very quick break, come right back. It's a rip-roaring market. We'll continue tracking on the other side.
Welcome back. Well, the market is looking all right. At least at the moment, there's not much to complain. But the big question is, where do we go from here on, and how long is this rally going to continue? We have Deepak Shenoy as well joining us on the show. Will join us very shortly to talk to us about the fundamentals of the market and what else lies ahead for the market right now. We're just at the cusp of the earnings season, Deepak, and seems like the provisional updates that have come in from the sectors, whether it is FMCG or real estate for that matter, they continue to be quite strong, and clearly the street is rewarding even Voltas and InfoEdge for that matter. Banking names, however, have reported a bit of lukewarm numbers, maybe barring HDFC Bank. Do you think that's just the indicator of what lies ahead for the banking index for the rest of the year as well?
To be fair, I think even HDFC Bank numbers were not so great. It's difficult to compare a pre-merger and a post-merger bank. Honestly, just marginally, I expect the margins to be under stress for the next few months, for the next quarters at least, simply because they have to get rid of some higher cost liabilities they have, and keep the the book growing. But in general, I would say banking would be not such a favorable sector in the coming year, simply because their largest growing part of the business, which was retail loans and relatively unsecured loans, whether it was credit cards or unsecured personal loans, they were growing at one of the fastest rate, and RBI is trying to curb that activity as much as they can. Meanwhile, we're seeing industrial manufacturing growing at a much faster pace, relatively low debt levels, some capex, some even internally funded capex rather than borrowed capex. So if the growth sectors in the economy are not taking credit meaningfully, and if the things that are growing are sought to be curbed by the regulator, I would expect the banking system is not going to be in as much in favor from an equity perspective. And in comparison, the industrial manufacturing and the related areas will be relatively more in demand. So our portfolios are skewed more towards the industrial manufacturing and relatively more domestic economy focused companies than the banks.
Deepak, do you think that there is still a lot of FOMO crowd which is still left, because a lot of market men in the month of March they sold out? I mean, there was an all-out call that okay, valuation महंगा है, bubble, trouble, 2008 repeat, regulatory concerns. I mean, everybody got scared. A lot of people were shaken up. Nobody thought that we actually see a vertical decline and a linear rally. Do you think in this rally prices have gone up, participation levels are abysmal?
I think I was actually talking about this for with a few friends. Some of them disagreed with me. I think there's still a lot of fear on the streets. Now we'll have to figure out if that really is true across. I see when I talk to people, more or less people telling me the same thing. India is expensive. The mid caps and small caps are expensive. Therefore, should we move to large from markets? But I don't see signs, traditional signs. Usually, when people, if it is a sign of euphoria, everybody's telling you to buy stocks. Not that everybody is asking whether it's the best time to sell, or is there, that they would like to get out. So it's not the same euphoric feeling that I have seen in past extremes. The extremes are not even as extreme. If you look at the P ratios of small caps, median P ratios, they're roughly the same as they were in 2019, although the prices have gone up 3x. So the earnings have also gone up 3x in that context. So there is an earnings multiple, earnings multiple being the same, and earnings having expanded at the same time as the same size as price. So I don't see this as a meaninglessly expensive market. But I also feel, you can make that call after you see this result that is in March. It's usually a big one, especially for infrastructure engineering sort of companies, where you'll find a bulk of their orders, bulk of their results kind of in the March quarter. So based on that, you could take a call on whether this is expensive or not. I don't think it is. I think the fear in the space is primarily because of as many, I think both media and articles and things that kind of make you feel that this is more expensive. It's much more expensive than China, but China isn't growing at anywhere close to the pace we are, especially in certain pockets. So I think and you can't really meaningfully invest in the Chinese market either without, they don't care about foreign investors at all. So from that perspective, I think, India remains favorable, at least in my view. And there isn't, fear there's only fear in the streets and not as much greed.
Right. Okay. Deepak, on to that thought, let me quickly take it across to Ansh. It's pretty lively a market and a lot of volume buzzers. Ansh has been noting them down. Ansh?
Right, so starting with Exide Industries, the stock is in focus as it has given a breakout from its key pivot high of 350 level with volume of over 28 times its 10 session average volume. The stock has also registered its biggest single session gain in over 2 years. Apart from this, Bandhan Bank will also be in focus as the stock has actually given a breakdown from its upward sloping channel, but it is trading near support base of around 177-178 level. The stock has also reported volume of over 4 times its average trading volume of last 20 sessions. Lastly, RBC will be in focus as the stock has given a breakdown from its rising wedge chart pattern, and it has also slipped below its 20 and 50 DA, indicating negativity in the stock. So keep an eye on the stocks.
REC and Exide, we've discussed that time and again. Deepak, where have you been shopping of late? This March fall, where did you pick your spots?
We haven't done a whole lot of selling, and therefore not so much of buying either meaningfully. Some focus in some of the power sector names. We haven't finished buying, so not naming a lot of this. There's whether it's transformers or companies in the power space, high voltage DC area. I think there's going to be a lot more attention here going forward, and not just because of electric vehicles, but overall electrification as a theme. We're going to see a lot more activity now downstream in transmission, and therefore in the equipment related to transmission as well. It's a kind of a capital good in that context, but there will be both the services and products which will make a difference. We've been very interested in hospitality. I think I might have missed the bus Somewhat, though we did invest in Indian hotels a while back, there is a bunch of around the transport, the hospitality industry, including leisure hospitality. Really, that is making a lot of moves. We're finding this. I thought this would be a short-term phenomenon after COVID, but you can't find a hotel room anywhere. You travel everywhere. Airports are full, airlines are full. No matter how many airlines they are in a sector, they almost always seem to be full. So I think something has changed. It's a premiumization of, in the sense, travel and tourism, and it's also in that sense bigger margins for these players until they get competition to come in. So these are the two themes I've been looking at closely, buying a little bit, but we'll wait for March results before we make our final calls.
Hospitality is a trend. I think everyone is, witness to the kind of uptick that we have seen in the prices, in the occupancy, all of that. But Deepak, what's your view on Nykaa and Voltas?
I don't have a view right now on Nykaa. I think the domestic consumption story is good, but the problem is the brand is relatively higher price. They've slipped back in terms of their numbers into what used to be were looking interesting from a profitability standpoint to not so exciting again in that respect. I think some of the other startups that listed in that space, not in this space of course, but roughly around the same time, they seem to have done a better job in terms of trying to move into profitability, or at least at the book levels and also at the cash flow levels. Nykaa doesn't have that same, that same concept going for them. So not interested. Again, March results might be might be dramatically different. Voltas, Bangalore is so hot. You just want to buy an AC company. It's probably the hottest it's been in a while. But ACs in general, I think, are this darling of the stock market for 2 months. And hot weather in almost always results in a much longer rainy period, at least in Bangalore. So you end up with whatever people will do in terms of buying ACs becoming a not so much a buying experience in 2 or 3 months. So I think it's a short-term phenomenon. Voltas is a good company, but I won't buy it just because of one hot summer.
Okay. Deepak, have to ask, closer home, you've got TCS coming up with numbers, so much magic happening at Wipro. What's the fate of IT in the quarter ahead?
I would keep very low expectations, Aisha. I think this is not a quarter where you're going to want to say, oh, the fortunes have changed. I feel, at least from what we saw in Cognizant recently and what we've seen in US commentary in general, that the companies that are actually trying to invest more into this space are in general in tech and services. I think they're going to take a pause to see how the impact of various new technologies from AI to a bunch of others will change how the landscape is. I eventually expect the Indian IT companies to thrive even in the land of AI and so on, because there will be still a lot of work required, human work required. As we found out recently, for instance, Amazon said that they have these shopping experience where you don't need human beings and they can just pick up their items and then put them in a cart, just walk out, and they automatically get billed. Turns out, there are 1,000 people in India watching cameras and making note of whatever people were purchasing just to back things up. So I think it's interesting that you might have a lot of work that is that looks like it's completely automated, AI based, etc., but you might still need a large amount of workforce, maybe in countries like India or maybe in different geographies, to back things up. So I think for the future, I don't see this as a tremendously limiting mechanism. I expect all these IT companies to gear up. But in the coming 2 or 3 quarters, they're not going to get that visibility. So they're going to have to build the capabilities and then harness them. So expect very little from IT this quarter. If they show me 10% year-on-year growth, I think I'd be kind of happy. We do have some small investments, but that's for the longer term, not this quarter or the next.
Doing well today, banks are not doing well for sure. What's not doing well today? Bandhan Bank, 6.5% down. Very little buying in HDFC Bank. Very little follow buying again in a Kotak Mahindra Bank, IndusInd Bank. These stocks are just not going anywhere. One stock which has had an outstanding run up of late has been Indus Tower. We've discussed this Kunal on and off, right? It's a stock which we talk about and then we move on. We don't consistently talk about it. Where is this stock headed?
I think this time around the stock for a positive change looks to be very interesting because earlier what used to happen is that in terms of price characteristic, Indus Tower and Vodafone Idea, they used to move in tandem. Any news flow affecting the stock on the positive side, for example, for Vodafone Idea used to have a positive effect for Indus Tower, but this time around it's been solely a stronger move for Indus Tower, devoid of Vodafone Idea, which has remained into a range. Now, particularly for the stock on the charts, I believe that the breakout post at 300 levels has been a turnaround or a critical breakout for Indus Tower, because post that is we've seen the stock raising up the supports from an earlier level of 250 to 255, and that's a significant jump for a stock, and that indicates that on the upside or on the move upside, the stock would probably scale past about the levels of 350, which could again be a multi-month, multi-year high for Indus Tower. So the momentum is quite strong. There have been minor bouts of consolidation closer to the 300 levels, but I believe that that should be considered as very good entry point for someone who is looking to buy stock even at current levels.
Right, okay. Let's also get the chatter across deep rooms, and Sharad is here with all the cover. Sharad?
Well, yes, in focus is Nuvoco Vistas, cement player, especially in the eastern region. This company is based out of when it comes to their volume sales. And importantly, what we are hearing from dealers is that domestic institution buying has caught up over the last two trading sessions. Even the volumes have picked up over the last 2 days. Now, importantly, 7 lakh shares have actually exchanged hands over the last two trading sessions. That translates into 0.2% equity stake. And importantly, the key DI is already invested in the company. They include the names such as SBI Mutual Fund, Mirai Mutual Fund, as well as ICICI Pru Mutual Fund. Now, also channel checks suggest that for the month of April itself, for the eastern region part, the company has actually undertaken a price hike in terms of the dealer pricing, and that has actually gone up roughly 15 rupees per bag on a month-on-month basis, and even on a sequential basis, there has been a hike of roughly rupees 9 per bag. Importantly, 70% of the volumes actually comes from the eastern region as well. So a strong domestic institution buying is coming, and also interest coming in certain HNI categories as well when it comes to Nuvoco Vistas.
Okay, so that's about Nuvoco Vistas. But Naresh, do a chart check for us on some of these cement names, because there was that report of a price hike being institutionalized in the month of April. Then the stock had run up today as well. There's a decent amount of buoyancy there. Which charts would you suggest from the cement pack?
So it would be Ambuja Cements and ACC. If you look at Ambuja Cements, it topped out around 600 back in 2022 and fell all the way to 330. Now, finally, the stock has sustained above the 600, 610 mark. So a new long all-time high. So looks like a momentum trade. Same as the case with ACC, which still has to catch up to that 2750 high, which was made almost 4 to 5 times over the last 2 years. So that also breakout. So the risk reward is great in these two names out of the whole cement pack.
Right, okay. That's the take coming in on the cement plays. Continues to be Exide. By the way, now clocking a solid 19% of a move, no less. There's Eicher, there's M&M, Maruti. Autos have really come back with a vengeance. Deepak, we've been discussing about, the boom in the auto pack for a while now. Would you still say there's value on the table and there are still names one can maybe add to or even buy afresh?
Honestly, we have a position in M&M, so quite biased there. But that part of that is because it's not just an auto company, right? They've got a bunch of other investments in industrial manufacturing, in defense, in a bunch of other sectors. All of them come under this massive holding entity which M&M is, and we're hoping that at some point there will be some kind of, some of the parts being greater than the whole, kind of either as a demerger or as some kind of value unlocking that will happen at M&M. On the others, I think the two-wheeler pack should do well in the coming few months, simply because if we have elections, and elections means money goes to the rural sector means they buy bikes. It's a typical thought process. So I think, the two-wheeler sales should start coming back at least towards, the next, in this coming quarter, as things go forward. I don't believe, however, that a lot of the fortunes there also depend on the monsoon. So if the monsoon has vagaries which affect it, then we could have some kind of a surprise on the negative side there. On four-wheelers, I still think personal vehicles seems to be going quite decently, not super strong. So while I don't understand the growth of Maruti, the M&M and Tata, at least sales numbers seem to be very, very exciting. I think that remains something that is quite exciting for us. Though Tata Motors has a different, its India business is relatively small compared to its global business and the larger balance sheet they have. On the commercial vehicle side, I mean, we haven't seen so much activity recently, but again, I'll await results to see whether we're seeing any kind of a upward bump because of capex increases that have been happening recently. I think we do expect that to kind of help that industry. So overall, I do think auto has a good run in sales. Remember, the prices have also run up. So be careful about what you buy, because anything you buy now can still see a 20-25% downside simply because markets correct a little bit. So you're paying relatively higher prices for them. But I'm excited about a few players. We're also into some ancillaries. We believe that as this growth comes in, some of the growth numbers will match their relatively smaller margins in comparison.
Okay, so selectively positive on the auto space, while of course across the board you shouldn't be expecting that kind of returns that we did last year. The markets for now have stabilized quite a bit. In fact, we are very close to that 22,700 mark, but doesn't look like we're going there in a hurry. But at least we have managed to scale past those record highs. Nifty Bank continues to be slightly iffy, so there's a gain of just about 100 points, I think, on that one. 110 point gain. But it is the broader markets that continues to outperform. Stock of some more movers right now. From the pharma space, you have Aster Health, which has been doing quite well of late. Gland Pharma is the other one to watch out for. Laurus Labs is actually also perking up, and AstraZeneca was just one of the stocks that we were talking about. Deepak, within the pharma pack, have you bought anything or something which is on the radar actively?
I'm honestly looking at the kind of returns that you're seeing in some of these stocks, at least the larger section. You look at a Sun Pharma, for instance, quite exciting in terms of market returns. We have not seen any major change in the fundamentals, but sometimes that just happens. Prices move before the fundamentals. But we would like to wait for results this time to see how things pan out. We have no pharma companies, almost nothing in our portfolio has pharma. So maybe, I mean, a momentum which is more a quantitatively driven, price driven strategy will have some pharma names, but the fundamental portfolios don't. So I'm waiting to see. I think very exciting. We used to own a bunch of pharma earlier, but they've had a long period of nothingness. The only external factor that is not visible right now is what FDA actions may end up doing, because their inspections have started to come back. Other than that, I don't see any major bumps. We'll have to see results and see whether things have actually changed on the ground.
I think in the pharma as such, pure play pharma, but what about healthcare and diagnostics, hospitals, etc.? Because there at least the trend is of more spend. Premiumization that we were talking about in terms of consumption is also partly has a play in the hospital sector as well and healthcare segment. What's your view there?
Absolutely. I think we own a hospital. I think we may own more going forward. The idea over here is that, like you said, it's the premiumization, the relatively, the higher demand for healthcare across the sector, whether it is, people using a lot, having a lot more issues with their health that require hospitalization. That seems to be something that has, earlier they used to just get treated at home. But over the course of the last 2 decades, you've seen a lot more people going to hospitals in general, and the hospitals themselves also gearing up and getting more return-oriented terms of for shareholders. That was not a process that we had seen very big earlier. So I think that's one of the reasons why, as a broad macro trend, hospitals have been exciting. I think that will continue to be the case. This year, supply is way less compared to demand. So whether it's at the premium end or the lower end, I don't see that dynamic changing meaningfully at all. And therefore, if there is good corporate governance, shareholders and hospitals should see significant growth. We're also seeing, export of health services as a big thing going forward, simply because healthcare has become either expensive or not easily available in countries that are more developed. And therefore, as India shapes up in terms of its presence and its processes being accepted worldwide, I think more medical tourism will come inbound, and also some hospital companies are investing in hospitals outside of India as well to take services there. So I think all of that will benefit the sector.
Is it time to bet on the chemical space again? And do you see any sort of balance coming by in the demand supply situation? The stocks have been really beat down, but at some point they're going to make a comeback.
That's the hope, Aisha. I think it's eternal. It rings eternal, at least this time in the chemical space. It seems to be worse than pharma. Pharma seems to have recovered a lot more. They both had challenges at some level of China. Pharma's probably less in chemicals. And chemicals, a lot of things that were specialty and quality have a significant competition in what China does. And to that extent, I think margins will remain compressed for the next few months at least, next quarters at least. But surprises can happen. But again, here prices will probably lead and fundamentals will follow. I think a long-term approach, because most of these companies don't have debt or don't have meaningful amounts of debt to speak of compared to the pharma crowd, we will actually see a better balance sheet help them as the markets recover, as the underlying chemical market recovers. But you'll have to wait. So if you have patience, I think this may still be a good place to play in. But companies that make, let's say, pure play caustic soda or something like that, that may not be the best place to place your bets, because efficiency have a very little role to play. It may be in more specialized chemicals that you'll want to do something like set up your long-term bets. We currently don't have any. I don't know enough of the space to be able to say I can meaningfully track it years before it starts happening. But also, I'm in the lookout. We'll see the numbers, and as the numbers come in, I know we'll be late, but we might get in at a later stage.
Okay, let's see when and if that hope does actually hold true, at least for the chemical sector. Thanks so much, Deepak, for taking time and speaking with us today. Time now to take the BTSC trades from our technical experts. Kunal, what's the BTSC trade?
So there'll be two buy calls. First one is upon HEG. That's a stock. So HEG and graphite, both of them are heading towards a multi-month breakout for themselves. So would suggest a buy with a target of 2300 for HEG. Stop loss could be kept at 2000. And the second would be upon a stock which I discussed in the morning with a target of 1100. Looks attractive. And my expectation is that now the stock could probably move up towards a higher zone of 1140 approximately. So revising the targets higher, stop loss could be till to 1030.
Okay, so those are the BTSC trades of Kunal. What about you, Naresh?
So first would be a buy on iShell Motors, which has broken out. Stop loss at 4190, price of 4300. Second is a buy on IDFC Limited, which has continued in momentum for the last few sessions. Stop loss at 119, target price of 125.